It's Harvey Jackson. Just going to go through the StatsCan information that we got through yesterday. First off, I'll just go through the weather, and I apologize, I just didn't see this earlier, but there is a huge area of drought uh, forming, or that is formed, and then these rains that have come across has actually taken away some of that area as well. You can see that there's Manitoba's not in as much drought as the rest of the prairie provinces here for sure. And you can see even in the last 7 days how that actually changed things here as well. Regina going up into the northwestern Manitoba. And here's your soil moisture percentile, and I think I showed a few days ago where the drought is building, and it's basically building in this area, and the soil moisture is showing up with that drought as well. And you can see some of that heat that we got a couple of weeks ago added to some drought in North Dakota as well, and up in our area, I would say that's probably welcomed, where there's a little longer growing season, and if the moisture is dry or the moisture is leaving the soil, you may not have that really big soybean yields or really big corn yields. I think the corn will hold on a lot better than soybeans, but time will tell. Here's your 6 to 10 day temperature outlook. Cooler as you get down into those growing regions, and above normal in the 6 to 10 out west, and into the prairie provinces as well. Moisture uh, at or below in the northern plains, U.S. and Canada, but we're still getting showers to go through there to change this. And this gets updated every day. Of course, it's going to look different every day. StatsCan, here we are. So you can see the changes. Thanks to Janelle to put this together. And, canola with an estimated yield at 39.4. Um, the trade estimate was a little bit higher than this, and I think that's what supported canola. And the same thing with wheat down here. I think the trade estimate was in the 52, 53 kind of bushels the acre, and coming in at 25, 35 on the spring wheat. That was a bit of a surprise, and you can see how things have changed here as well. Upside and a little bit of downside as well on some commodities. Here's the S&D, trying to interpret those numbers into an S&D. And again, there's still some more numbers yet to come out from StatsCan to give you exact crush, exact exports. And I'm just expanding a little bit of crush and exports. And on my what if, I said, if the yields are going to come in lower than the StatsCan, and a little bit lower than last year, which is kind of the trend that I'm seeing, but not to say that this is accurate here. There's a lot of data to come in. So I pushed down exports and pushed down and crush here, and just because you're going to have less supply, a little bit more competition for it. So here's just a different visualization of how this is interpreted. So you get your stocks to use has been increasing since basically 2021 went flat, and then up to 17 and a half or about. And if we're going to cut some of the exports and crush on my what if scenario right here, we would actually maybe go down a little wee bit. But again, that's time will tell. Production wise, we're still increasing since 2021, and if we do come in with a little bit lower yields, we'll be going down. Ending stocks, and again, increasing since 2021, and and again, this is all based on the what ifs here. So let's just get into wheat here real quick. Adjustments back a couple of years, unlike the canola, I went back 3 years with some adjustments, and here I put the what if it increased in yield over their estimates, and what this is actually just an average minus 2021. This is an average for all years that are known, and it comes in at 53.9. So if we just get an average yield excluding 2021 for the last years all the way back to 2017, we would end up with close to 30 million metric tons of production, which is similar kind of trends that we're seeing here, and it would give us a carryout in the 22% with the exports staying flat. Here's just how it looks as well with the what if in there, and your stocks to use increasing. Wheat production, it looks relatively flat, and if we do get a little bit higher yields, we'd be pushing into reversing this little bit of a downward trend that we've seen in 22 to 23 into this year. It would maybe push it up a little wee bit. Ending stocks increasing. So let's get into canola and where the markets are. Canola is up again, $6 and $5. Rapeseed is up the same. Soybean oil 0.6 of a cent, palm oil up 22 ringgits, crude oil down or flat actually at 73.5, soybeans up 10 cents, and then your wheats are a bit of mixed. Your milling wheat is a dollar and a quarter down. Hard red winter is down 4 cents, and your spring wheats are up 3 to 1 and a quarter or 1.5 cents Canadian dollar flat. So it's just what I've been looking at is just the strength in the technicals here. Now we don't have a full. Can I say that we're making a higher high? That is not the case here, but looks like we're building a little bit of strength in here, post or pre-report and even post-report here. And upside target, I would be looking at somewhere in that 635, and this is your 10, your 20 day, and your 50 day. I'm looking for these two to actually kind of cross over. That would give me a little bit of more stronger signal that the market is got a little bit of a continuation of going up here. Same thing in rapeseed, looking for this to cross here. The 10 day to cross over the 20 day would give me an indication of some more strength. Looking for upside in that 50 day moving average at 476. Here's your palm oil. It looks like it's actually basically stalled here with its leg up. Um, and that's let's just say that it's got the right trend. Now we just need it to continue. Soybean oil doesn't have the big percentage moves that the soybean and the canola, rapeseed, and palm oil has, but it's still on an increase. If we're looking at the slow stochastics, this would be the area to buy right here. And when it crosses back over this, so you get above and then you cross back over, that's the area that you should be selling your option. So we're looking for this crossover, could stay in there for a while, and when it gives up, that's when you sell. Soybeans, little less movement here again, but looking at these converging here, uh, the higher oil seed markets actually have they're getting a lot tighter than this. So looking for that to cross as well. Here's your rapeseed minus canola. So your rapeseed is right at this point $95 more expensive in Canadian dollars than canola at this point. And I'm actually looking for it to narrow. So, that would mean the canola is gaining on it, and hopefully we get some strength in there. So the Canadian dollar is actually, you can see the length and strength that we've had since August 5th, and going up. Now we look like we're kind of converging at the top here, maybe stalling out a little wee bit. We'll see. But what I did here is just looking back all the way to August 19th, when we actually kind of created a bottom, and see how that Canadian dollar canola, how it's priced. So the canola is actually uh, on its own without the U.S. dollar influence, it's up 6%. And if we look at priced in U.S. dollars, it's up 8%. So just knowing that the Canadian dollar is going up and the canola is going up, actually, it gets bought in U.S. dollars, and this is actually a fairly strong signal when you see the both of them going together. The producer buying Canadian canola offshore is paying in U.S. dollars, and they paid 8% higher price since the 19th versus just buying in Canadian dollars. It's at 6.28%. Different visualization here. So you just, hey, this is the USDA. It's a bit dated. It's not been updated, and their numbers are always different than StatsCan as well. But saying the canola ending stocks, and just where is that grain in the USDA's eyes. But you can see that chart on the left. Canada is number 2 for holding stocks, and the European Union is lower, and both the Union and Canada is maybe decreasing, and that's what's maybe giving us some support here too. So, but where are we in global ending stocks? So if we do have a problem, we move this number down, and we'll see if that gets reflected in the next USDA stocks reports. Wheat, looking for some upside targets. Again, slow stochastics is strong, showing some upward movement here. I did not put in the 20-day and the 50-day in here, but they're not touching yet. But we're looking at the 78.6 retracement value, just above 6, or right around that 607. And if we're really bullish, we're looking at that 695, the 38.2 retracement for wheat. Red winter, just to give you, relatable products, and some upward movement there as well. So milling wheat, We've had a reversal there, which is good because we went to all the way down to our previous lows back made in March and April, or February, March. So global wheat ending stocks. So since 2019, we've been on a decline every year, and this is USDA again. But if we look at where was the last time we were at these values, you would put you back into 2015. So the global situation is tightening up on global wheat ending stocks. You can see where that puts Canada uh, in production. We are, or as exports, we are the number three exporter, with Russia and then European Union ahead of us. With knowing that European Union's having some um, production issues, we're not in that same situation right now. But if we're number three, it could be helpful for us. So again, let's just have a quick look at where the next reports are going to come out. So we've got stocks report that's going to reference July 31st. So we're going to get maybe a cleaned up S&D at that point, to a certain degree for old crop. And then there's another model-based uh, uh, information that's going to come out on the 16th. I'm going to say there's probably, as we move into the growing season, that has less and less effect and less uh, credence to their numbers. September 12th is also the crop production, so we'll be looking at the world stock numbers there. So hopefully we'll get some cleaned up data there as well.